My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to save you some money. My job is not just to entertain, but to educate and teach you. Put this one in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Maybe it takes a darned recession to beat this damnable disease. Maybe it even needs a bear market, which is where we are today after the Dow plunged 1,465 points, S&P plummeted 4.9%, NASDAQ nosedived 4.7%. The coronavirus is the ultimate exogenous event. It's a public health crisis that's wreaking havoc all over the country, and it hasn't even infected that many people yet. But we know it will because it's spreading exponentially. Think of the stages. First, many people thought it couldn't happen here. Then they thought we could keep it out by blocking travel from China. Then they thought it could be contained. Then as it kept spreading, we were told it was no big deal. There were so few cases, so few deaths. Why all the fuss? A lot of authority figures, including the President of the United States, seemed incredulous. Then everything fell apart. We started getting reports of people being stricken who hadn't even been to China. We discovered the term community spread. We heard about the outbreak in Washington state then the suburbs of New York, then the Boston Biogen fiasco. It dawned on us that when they say novel, as in novel coronavirus, novel means we have no immunity to it. We have no vaccine if you don't, to try not to get it. We have no Tamiflu once you get it. We're all babes in the woods against this unseen nightmare. Novel? Yeah, it's a Stephen King novel, all right. Now we're canceling schools, including colleges. We're canceling big public events. We're stockpiling mass test kits, anything that can protect us. They call it mitigation. So now what? With the market in tatters, with fear everywhere as we hunt for our Purell bottle, and alcohol, and toilet paper, what happens next? Well, there are two ways I can do this. Two ways for me to play it. Oh, I could pile on once again, everybody, I'd tell you, it's all over, get out, just skedaddle. It'd be easy to say the bear's back, the bull's dead, so you got to sell. I heard that a lot. Or I could offer a contrary, more constructive view, keeping in mind that things can still and occasionally do go right. Tonight, maybe just to bust the gloom a little, I want to take that second approach, the constructive one. Why? Because I have been bearish for a month and a half now. I started warning you about the coronavirus from the moment I first heard this thing. I went to the Super Bowl. I wanted to see the Super Bowl. But I came home. I came before I could even see 1 minute of the game. So I could play a tape the next morning of one of my favorite investors, David Tepper, owner of the Carolina Panthers, taught me a lot at Goldman Sachs, saying that the world has changed and changed for the worse, maybe much worse. And that's been my watchword ever since. I've told you repeatedly that I hated the oil stocks, for instance, the worst of all stocks, with the exception of the cruise lines. I told you they were uninvestable over and over again, and particularly the oil leader to the downside, the pathetic Occidental Pete, down 71% for the year. Egads, an institutional name, no less. Yet now, everyone I know, everyone I go, everywhere I go, people have given up. They want to sell everything. They want me to tell you to sell everything. Maybe you want me to tell you. I'm not going to. No. See, you don't need more bearishness from me. You need to know what could happen that would make me positive. So what could still go right? Well, let me start with a caveat that's so important because we're a business network. The Federal Reserve is not on the list. Despite the insistence of endless money managers that the Fed can help, I want to provide liquidity for whatever the hell's going on with those repos. But over and over again, I hear that they can help. They can't. It just doesn't matter. It's moot. You can't solve a darn public health crisis with monetary policy, for heaven's sake. If the Fed wants to do something useful, go buy some mortgage-backed bonds, because I got news for you. The 30-year mortgage, which I'm in the process of getting, those rates stopped going down a long time ago, despite plummeting Treasury yields. I'm getting a deal that's much worse than when the Treasuries were at 2. Honestly, I'm not ever sure the president can help if the only thing he can get done are a payroll tax cut and some loans to tide sick people over. Those aren't bad ideas, but they probably won't be enough to move the needle. Payroll tax cut, we got to be on a payroll to get it cut. We need massive fiscal stimulus to save us from an even deeper recession than I think we're going to have. So what can go right, okay, that actually matters? I'm going to give you some right stuff. First, we need to flatten the curve of the outbreak. Most Americans will probably get this disease, but when we get it, it matters. When? If everyone gets it at once, our healthcare system will be overwhelmed like we're seeing in Italy. We wanted it to be more like South Korea, where they slowed the spread and got the situation under control with great alacrity and ingenuity, like drive-through testing to encourage people to catch it early. We can't even find tests in New York City, despite what you hear about in Washington. You don't get one unless you're on death's door, it seems. That means we need to calmly start separating ourselves. You've heard these terms, right? The separation, the crowds getting away from them, stop gathering, stop going out, that kind of stuff. No fans at NCAA games, done. No more college, done. That's right. No more late-night talk show crowds, done. Anything to stop congregating, maybe including NBA baseball, NBA and Major League Baseball, and any and all conventions and fundraisers, reunions, you name it. Stop traveling, for heaven's sakes, unless it's truly essential. If we do that, we can beat COVID-19. Okay, it's going to cause a recession. I told you that. Many people will be hurt financially, but our healthcare system won't be overwhelmed, and a lot more sick people will live. So stop acting like everything's normal, because it's not. Work remotely if possible. It won't kill you to stay home. It actually might save you. 2, our scientists could still solve this. Dr. Tony Fauci, who helped turn AIDS from a death sentence into a manageable condition, he's given us the straight dope the whole way. He's never said the virus is under control, not once. He's hopeful we'll get a vaccine for next year. Unfortunately, they take a long time to develop. In the interim, maybe we can come up with antivirals that get people out of the hospital faster. That's why I want the government to put itself on war footing to stop this thing. Get a Manhattan Project going, for heaven's sake. Offer a huge prize to anyone who comes up with a cure. More realistically, we need to flood local community health organizations with the billions of dollars they're going to need to do their jobs. Think the Marshall Plan for community health. We need a Malcolm X approach to this thing, as in by any means necessary. And we want to hear that Regeneron or Gilead have novel drugs to fight a novel virus. Hope for the best. Prepare for the worst. 3rd, maybe we're going to get a break with the weather. Now, we don't know whether this virus, what it'll do when it gets warm, although it's still striking people in warmer climes. But if we slow the spread, flatten the curve, maybe we can get to the summer without horrific casualties and overwhelming the public health system. 4th, we need something major from the federal government. Something really brilliant here. Not a payroll tax cut. That's a ho-hum. That only helps people who are currently working. We need to pay people to not work. Maybe we give them $1,500 each, some kind of moratorium on student loans. How about that? That's $7 trillion. Moratorium. Think about that. How about a sovereign wealth fund to buy companies that get bankrupted by the disease for pennies on the dollar? At this point, you need to think outside the box. None of the other stuff, the tired stuff, that doesn't work. This is different. With interest rates so low, the government can get away with spending fortunes here. Hundreds of billions of dollars. Again, whatever it takes, as the rates are the lowest ever anyway. 5th, maybe we're going to get some positive breaks actually on the business front. We need it when you look at the stock market. Hey, what if Boeing gets approval to fly the 737 MAX? What the heck do they have to do with Boeing? I mean, that could be huge. Even if there's not going to be a lot of demand from airlines at this point, maybe the stocks of companies yielding 4 or 5% will find bottoms, because not all the dividends are phony. Some are safe. All right, that could go what's right. That could go right. I mean, this could happen. It's not pie in the sky. All that said, I'm still pretty bearish about the averages. I'm convinced this market won't really stop declining until we fall to the lows from December of 2018. That's the last time we thought we were headed for a recession. Those levels are still a long way off, unfortunately. S&P 500 currently at 2741. Well, it could find a floor at, say, 2350. Dow went to 21,712 last time, 21,712. Now it's 23,553. Okay, not that far from here. Of course, many stocks will bottom before those levels, and that's why you need to pick at them. That's why we still talk about stocks worth buying on the show. Why we say there's still a bull market somewhere. If you need money for the next year or two, maybe wait for the next bounce and actually sell something until you have enough cash for your own peace of mind. Otherwise, though, I think you should be putting your cash to work slowly, picking at the slowdown stocks, the drugs, the utilities, and some of the higher growth tech names that don't need a strong economy. And, of course, please, if you don't own gold, I mean, I know I'm a broken record gold. Buy gold. Bottom line. Okay, there's nothing more important than trying to stay home. Wash your hands and get your supplies. If you need to go out, wash your hands some more. Don't touch your face. Wash your hands. Don't shake hands. Hopefully we can stagger this thing out, and our scientists will come up with something to stop or at least slow the spread. I know. It's not much to hang your hat on. And it includes a recession. But it's the best we can do. Chuck in Arizona. Chuck.
Hi, Jim. How are you?
I've been better. How about you there, partner?
Good. First-time caller, long-time watcher. Watch you in the morning on the stocks, watch you at night.
There you go.
The question is, Jim, I bought stocks with the UPS. I'm in the House of Pain here. I bought it at 119, so I'm down about 30% on it. and now watch it down to about 88. My question is, you think I should buy some more of these shares at this price or wait a little bit?
A wise woman,
my cost down to...
a wise woman by the name of Karen Cramer always told me, it's not where it came from, it's where it's going to. That stock yields 4.5%. They can afford to pay that dividend, I think. It's down 25%. I would use stages to buy. It's at 87 now. Probably next stage would be 82 and then 76. That's a buy, not a sell. Do not give up with David Abney or a great American company. Debbie in Ohio. Debbie.
Hi, Jim. How are you?
All right. How about you?
Doing fine. My question has to do with health insurance stocks.
Right.
President Trump met with the health insurance officials and said that the industry would waive fees for testing for the COVID virus.
Right.
And also assure treatments were covered. Do you feel the health insurance stocks are a good investment?
I think they're a better investment than they were because of the potential demise of the Bernie campaign, because he was so much against them. These stocks have run up tremendously in the idea that Biden's going to be the nominee and not Bernie. So they're going to have to cool off. And when they cool off, we're going to take a hard look at them. They haven't cooled off yet. Let's go to Lou in New York, please. Lou.
Hi, Jim. How are you today?
Well, Lou, it's been a long day, frankly. How about you?
Pretty good. Hey, I'm a long-term stockholder of a REIT you're very familiar with, Ventas. I've been averaging down from the 50s range to today's below 40 close. Do you still believe in the Ventas growth story over the next 5 to 10 years? And do you think that it is still keep the very important?
I'm worried about Ventas. I like Deb Gafar. I called her bankable in the last book I wrote. But I've got to tell you, the numbers have not been good. She revised her forecast. And then I even read a piece yesterday, obviously, about some of the health risks at nursing homes. So tough. All right. Look, there are two ways to play the ultimate exogenous event here. That is the coronavirus. I think you should be putting your cash to work very, very slowly in some of the names that we've suggested. There's two stocks out of the Dow 30 that I like, but I like them. Oh, man, buddy, tonight, if cruise lines and restaurants and retailers and airlines and oils are all in trouble, what does it mean for the bank stocks? Let me give you my take. Then, with the Dow officially in bear market mode, I'm going stock by stock and helping you make sense of the index. Yeah, like I said, there's some things to like. And after another dramatic sell-off, is it time to start being more constructive when searching for actual buying opportunities? So I'm going to eye an under-the-radar software company that has no economic sensitivity that I think could be worth considering. So stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.